Well, we've been talking about that Pro Farmer Crop Tour going on this week. It's an annual event, and one of the participants on that tour happens to be our regular contributor, Ted Seifert of Zaner Ag Hedge. He posted earlier this morning he was on a second stop for the day, on day 2 here, and he was around Kearney, Nebraska. That'd be in the central part of the state. Ditch irrigated corn, 36-inch rows, he says. Some stand issues there. The population lower than expected, but the maturity, he says, was far better than what he saw yesterday. He said the yield check turned out to be 133.8 bushels per acre on that. You can see the ears there. They do look like they're tipped back on 2 of the 3 sample ears that he had pulled. And we thank him for that post there, and we're looking forward to more posts as we go throughout the week here. That tour continues into tomorrow. Let's take a look at prices right now. And of course, overnight we had a little bit of a bounce in the corn market from the reports coming out of that tour yesterday. Reports out of South Dakota and Ohio left a little to be desired, and the market bounced. Well, this morning the market is going the other way. We have September corn down 4 at 361. December down 4 1/4. On the soybean trade, it started out with gains of about a nickel or 6 cents or so, and they have kind of faded. We have September 2 1/4 higher at 856 1/4. November 2 1/4 higher. On the wheat market in Chicago, big losses now today. And currently on, let's go take a look at September Chicago wheat if we can. Down 7.5 at 458 per bushel now on the low of the day. Kansas City also under pressure today. We have September currently down 6.5 at 384 3/4. Minneapolis wheat isn't like the other two. It is a little weaker, but not that much. September down 1 3/4. Brian Hoops is the president of Midwest Market Solutions. He joins us now from Springfield, Missouri. And Brian, a lot of variation, not only in the yields that they're finding this year on the crop tour, but also in the market prices, even from moment to moment. It really is jumpy here today.
Yeah, and it's just kind of a sideways choppy pattern in here. You know, corn market higher overnight, now has turned lower. There was some really good rains moving through portions of Iowa into Illinois. They did bring some bad weather along with it, which is unfortunate, but for those areas that did escape some of the high damaging winds, it's a pretty beneficial rain, and the market's reacting to that. You know, the crop is expected to improve as they go into the ice states. Nebraska is certainly going to be much better than South Dakota was, and get into Iowa, Illinois. The trade's expecting we're going to see better yields than what they found out in South Dakota and in Ohio.
Now, they more or less kind of meet in the middle, don't they, eventually when they wrap up the tour? Do you think that the reports are going to be fairly average to maybe above average if they get into Iowa and Illinois?
You know, the yields will probably stabilize, especially in Iowa. There's some pretty good crops there. You know, so I don't think we'll see the big dramatic swings like we saw in South Dakota, where yields were over 20 bushels an acre less than a year ago. I certainly don't look for that in Iowa. You might see that in Illinois, but that is exactly what the USDA is predicting, a sharp drop in yield of about 20 bushels an acre compared to year-ago levels. So it may not be anything that's a real surprise to the trade. You know, this market, I think, could just be very choppy, very sideways affair until we get into actual harvest data. It's going to take something like that to give us an indication of where these yields are actually at, and if the USDA is close on their market information. And it could take some time where we just chop sideways and really go nowhere.
Okay, Brian, we'll come back in a moment and we'll take a look at the other side of the equation. We'll take a look at our livestock trade here on a Tuesday when we come back right after these messages. Well, we pointed out earlier in the broadcast, the cotton conditions declined by 7 percentage points nationwide. Just the state of Texas went down 10 points in the good to excellent category. Brian Hoops rejoins us now. He's with Midwest Market Solutions out of Springfield, Missouri. The cotton market is a little firmer, isn't it? But that doesn't seem to be showing the gains that would be indicated by the drop in the crop condition there, Brian.
Right. We are seeing a little bit of buying coming into the cotton market, but, you know, 34, 35-point gains is not much. We had a big drop yesterday going into that report. It seemed just a small recovery, but it's an inside trading session compared to yesterday's range. There's a lot of resistance up around 60-20 on the December contract, and that's probably an area we're going to have to get above if we're going to see speculative buying come back into the cotton market.
On the other hand, you look at livestock and big gains here. We have triple-digit gains just everywhere right now. Let's look at live cattle here first. And on the live cattle board in Chicago, we have that October contract now showing $100.33. We're up $2.10. On the feeder cattle market, big gains there too. We have September up $2.53 at $135.35 per hundredweight, 25 cents off our high of the day. And on the lean hogs has October now $1.15 higher at $65.17. December up $1.68. So pretty sharp rallies here in the entire protein complex today. Brian, what's up?
Yeah, exactly. We're good to see the cattle market recover. You know, yesterday we had a rally going in mid-morning. That rally failed after the show list numbers came out. There's a lot of optimism. We're going to see better cash trade this week than what we've seen. Packers increased their slaughter capacity on Saturday to make up for the shortfall with the Kansas plant being closed. And when they increase those slaughter capacities above previous weeks, that's an indication that they're going to try and kill as many cattle as they can. They may need to buy some cattle to do that. They've got record margins they're working with right now, so it certainly makes sense that they're going to do all they can to take advantage of those margins while they have those.
Excellent information. Thank you, Brian, for talking with us for a little bit today. Brian Hoops happens to be the president of Midwest Market Solutions. He is in Springfield, Missouri, and Christina, of course, will get new wholesale beef cutout values at the top of the hour coming up. Yesterday, big gain again, mainly in select cuts. We'll see if they follow through today. It'll be interesting to watch.
Looking forward to it. Welcome back, by the way, Mr. Boland.
Thank you.
Appreciate you.